Welcome to Momentum Monday. Today is January 7, 2024. We started the year with a little shakeout uh, designed to reduce the extreme bullishness, basically, that we had towards the end of last year. Sentiment was rather bullish. Everyone was expecting just continuation of last year strength, just because 2024 is an election year. So the premise was that politicians and federal officials are going to make everything possible for people to remain happy, which means, market to continue higher. But financial markets tend to move in the direction that will surprise the majority of people, especially in a short-term perspective when we see extremes in sentiment, both bullish and bearish. So it's, even if 2024 is another above the average year for the stock market, that doesn't mean that we won't see normal 3 to 5% pullbacks, even 10-50% pullbacks along the way in the indices. The reasons behind this pullback in the first week of January could be numerous. I don't think they matter that much. One possible reason is just profit taking for tax purposes, like people who made a lot of money last year didn't want to pay all of their taxes this year for last year profits. They just maybe waited to sell in January to lock in some profits and pay next year. Another reason, obviously, which is much more viable, is it's all about interest rates. On last Wednesday, we saw the Fed minutes from the December FOMC meeting, and there wasn't anything clear about a specific program or specific schedule for interest rates increases. And the market has already discounted 150 basis points cuts this year, which we don't know if they really happen. The job number on Friday was extremely strong. The economy is doing well now, so it's the Fed officials might just decide to leave interest rates higher for longer. And currently, the three most dangerous words for the stock market are higher for longer. So we'll see how things evolve. So last week we saw the S&P 500 just dropped 1.5%. The QQQ dropped about 3%. Small caps dropped about almost 4%. Everyone was expected just small caps to finally outperform in 2024 after so many years of significant underperformance, basically just going sideways for multiple years. Well, so far the beginning of this year is not very bullish for them, but those pullbacks to rising 50-day moving average are bullish, and they actually offer much better risk to reward entries. So the Russell 2000 IWM dropped 4%. You know what else? What went up 4%? Interest rates. The 10-year yield, and we're looking at it right here at TNX. It kind of went up 4% last week. So it was kind of mirroring image to Russell 2000. Just like in November, December, it dropped. The 10-year yield dropped about 25%. At exactly the same time, Russell 2000 went up about 25%. So very highly negatively correlated to interest rates. This is why I said that interest rates expectations are still the major driving force in this market, and much more so than earnings. and earnings expectations as of right now. So starting the year, the first week of the year, the worst performing sector was probably semiconductors, down about 5%, one of the best performing sectors last year, and also many of the mega caps that went up significantly last year, anything from Apple to Amazon and so forth, Tesla. All of them, started the year relatively weak, pulling back more than the average stock. Also, all of the big leaders, all of the big movers from December, the highly shorted stocks like Carvana and UPST and Affirm, they went down to already 20-30% in just 4 to 8 days, which is a normal price action. Anything that can go up 50 to 100% in a month is completely normal to pull back 20-30% in a week or so. And remember, those types of stocks, then they tend to move 5 to 10 times faster than the general market indices. So when the S&P drops 30, some of them can drop. When the S&P drops 3%, some of them can drop 30. It's just completely normal. This is why we as traders love them, just because they move so fast. So interestingly, the best performing stocks year today so far, at least the best performing sector is healthcare, just kind of defensive rotation, defensive sector rotation. We saw stocks like Moderna and GIOD and a bunch of other large cap biotechs, which have been lagging for such a long time, especially last year. They outperformed in the first week of the new year, and typically the action in the first week of a new year is very telling about the trend that we're likely to see, at least in the first quarter. So we might see a lot more strength in those names, a lot more defensive rotations. So biotech super strong. Strength so in the individual biotechs, the index itself was flat for the ETF. The biotech ETF was flat for the week, and it pulled back toward its rising 20-day EMA. So let's see if it can bounce. I think going above 90 would be a bullish signal for me that I might play with either January 12 or January 19 co-options. And another option is just to use the 3x long biotech ETF LABU, LABU. And I'm thinking if it can clear 124, I would be interested on the long side. Katie Wood's biotech ETF, ARCG, is also one that I'm watching for potential bounce. And in general, there's so many setups in individual biotech stocks, but they come with a lot more risk, as they can easily gap down 50-60% overnight. So it's typically when I deal with individual biotech stocks, I rather approach them with options, so I can limit my downside risk. Some of the biotechs that are shining right now, Cytokinetics, big breakout on a positive study on their heart-related drug, and immediate follow-through. They're rumored for an acquisition. Obviously, nobody knows if that will be true, but as you can see here at the volume bars, definitely accumulation. So any slight pullback here would probably be a decent risk to reward opportunity. BMRN is another one that is setting up for a potential breakout. I'm thinking if it can clear 98, 99, it might take off, especially if the biotech sector remains strong. Another one is Rockets, pullback to its rising 20-day moving average. So I'm thinking just a bounce above the last red day's high might interest me on the long side. Another sector that did really well in the first week was financials. They finished the week near 52-week highs, and some of them, like JP Morgan, near all-time highs. And as we know, earnings season begins this Friday, and it always starts with a bunch of banks reporting. And in the past few quarters, many of them just went up in a week or two ahead of their earnings, as the market was discounting their strong earnings ahead of time. And we might be seeing something similar right now. As we can see, Bank of America broke out, Citibank broke out, Wells Fargo broke out. So last week I decided to play this potential move with the ETF BNKU, which is a 3 times leveraged big financials ETF. Another industry that stood out was shipping. Obviously, due to tensions in the Red Sea between the US and Iran, and the shipping rates have been going up, and all the stocks of all the shippers, marine shipping companies, have been going up. ZIM, started the year with a quick 50% jump, but also many of the other shipping companies also bounced and were among the best performers last week. TK Tankers, TNK, FRO, another one, LPG, another one, and also coal stocks were super strong, which is probably also related to that to those tensions in the Middle East right now. As anytime we see coal stocks, like HCC and AMR, breaking out multi-year highs. And LPG as also, which is liquefied petroleum gas. Anytime we see those types of stock go up, that's basically a play on energy security. So there's definitely some macroeconomic political issues also behind those moves. So in general, the overall market is in a pullback mode. Last week, every time we saw like a tiny bounce in the morning, it was followed by a sell-off later in the day and a close near the lows of the day, which is a bearish market behavior, at least for the time being. And I wouldn't be surprised if, for example, in the QQQ, we might see some like tiny bounce towards the 20-day near 404, 403, and then another leg down to test the rising 50-day near 387, 390. I wouldn't be surprised if we see that to have like a proper pullback, proper shakeout. But other than that, on the long side, I'm interested in biotech and financials, and anything else is just on standby right now. So see you guys next week. That's it for now.